Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation and the focus of the Options-Doug chat channel in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step of my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And just to be clear, I will be talking about setups today in an underlying asset like the S&P 500 futures or SPY or stocks like Apple or Tesla. And those setups can be taken any number of ways. For example, today, call buyers were out in force. I'll talk about that more. Call buyers in NVIDIA made a fortune today. All right, so again, the basis of my planning is the options market, and I'll be talking about setups and underlying assets, again, that can be taken any number of ways. And questions and comments are welcome, and I will be watching the Options-Doug chat channel in Discord and the chat in YouTube for your questions and comments. So please feel free to post your questions and comments. All right, let's get started. What I want to talk about today, first of all, go over news items upcoming for tomorrow, primarily. Go through my positional analysis, then I'll talk about setups, and then we'll take a look at the live market. All right, so first of all, today, the news for today is tomorrow, Friday expiration. And that is the really last remaining and the most important event for the week. And that is the monthly options expiration. And also, the last time I checked my economic calendar, Jerome Powell was speaking tomorrow at 11 a.m. And there have been Fed speakers throughout the week, including Bullard, and we'll take a look at that in a few minutes. Comments from Bullard did seem to move the market. All right, so let's take a look at start positional analysis now. Take a look at some charts. And let me just point out this, I believe, was this sharp move lower was initiated by comments from FOMC member Bullard. Let's just take a look at that. This is all that I saw. And that's right here. And this, of course, comes a little bit later after the actual event. So Bullard reaffirmed his support for lifting interest rates further as an insurance policy against inflation. All right, so anyway, let's get on with the positional analysis now. So these are the levels that are in play today. This is Bookmap showing ES futures, S&P 500 futures. And before I dig into this chart, I'm going to take a look at a larger time frame. I'm going to start with a 30-day 1-hour chart. This is from Thinkorswim, showing SPX. And the levels that I have on this chart, first of all, upper and lower edge, the expected move for the week. And this is for SPX. It's a little bit different for ES, shown by the dashed purple lines. And then the upper and lower edge of the expected move for the day, shown with the dashed blue lines, and that level was tested, and now SPX is trading below that level. So those are the expected moves, again, for the week and for the day. And now I want to point out a couple of key Spotgamma levels, and these are provided to Spotgamma subscribers for a variety of platforms. First of all, here's the put wall. Now back down to 4,000. It jumped up to 40.50 yesterday, back down to 4,000. That's the strike with the largest net negative gamma, and that can be expected to act as support. And then the next is the volatility trigger at 41.45. That's Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In negative gamma environment, they have to hedge with price. They have to trade with price to hedge their delta exposure. On the other hand, above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, they have to trade against price to hedge their delta exposure. So SPX is trading above its volatility trigger now. And then 41.50 is the absolute gamma strike. That's the strike with the largest absolute gamma. And again, that moved up from 4,000 yesterday to 41.50 today. So it has been oscillating back and forth between 4,000 and 41.50. And then here's the call wall up at 4,200. That's the strike with the largest net positive gamma that can be expected to act as resistance. And note that SPX did test again its upper edge of the expected move for the day, still below the upper edge of the expected move for the week. And these levels are a little bit different for ES, and they were pivotal in trade in the ES today. And just one thing to note, this recent high here, this is from May 1st. This high of 4186.92, again for SPX. It looked like SPX made it up to that level and then traded lower. So again, SPX tested the recent high and is now moving lower. And then these are the Spotgamma levels that are in play for today, the 4 levels that I follow closely, the key daily levels, the put wall, volatility trigger, absolute gamma strike, and call wall. And let me check for questions. And Sheena asked, are the upper and lower moves for the day, the week, from Spotgamma or for from the options chain? They're from the options chain. I just get those from the options chain at Thinkorswim. All right, so that is the larger time frame. SPX again has recently last couple days broken out of this very narrow range, 4100 to 4150, and has tested the recent high, is now trading lower again. All right, let's take a look at another Thinkorswim chart, and take a look at the levels that are in play for today. Again, back to SPX, showing the levels again that are in play for today. Let me just... Alright, so here's the upper edge of the expected move for the day. Price traded above that, then moved lower. And then the upper and lower edge of the expected move for the week. And also Spotgamma levels that are in play are in range here today. Here's the volatility trigger, and also the absolute gamma level at 41.45, 41.50. And then this 41.75 level was noted as resistance today. And it has definitely been central. Prices oscillated up and above and below that level for today. Excuse me, this cold persists. All right, so let's take a look at Bookmap now, and note I have the two levels of notes here, two columns for notes. First is Spotgamma, and these are provided again to Spotgamma subscribers for a variety of platforms. And this is for Bookmap, showing SPX levels. Right now, Spotgamma is using a 13-point difference between ES and SPX, and I calculated that difference at 11.5 points. So I'm showing my 41.75 level just a little bit lower. But the levels that have been key today, first of all, this 415 level, SPY 415. Those are shown on my cloud notes. I'm showing SPY levels, and that is a large gamma 1 level, the most important level of gamma that acted pretty much as a launching pad this morning for that sharp move higher up to the upper edge of the expected move for the week for ES. And note that was an excellent level for resistance. I mean, it went right up to that level and reversed lower. And then this is the upper edge of the expected move for the day, again for ES, a little bit different than SPX, and that has acted as the final resistance so far for today. And again, this is where the apparently the Bullard comments came in, just as that price hit, ES hit the upper edge of the expected move for the day. And we'll talk about setups in a little bit more detail in a few minutes. So those are the levels that are in play for ES. And RJ asked, how do you find the ES upper edge of the expected move for the day? And I just I get that in an options chain in ES. So let me go to Thinkorswim, go to ES, and over here. So at the close, so you could I get the daily expected moves for ES and SPX, and just the same method. So this is tomorrow's expiration. One day to expiration. Right now it's showing plus or minus 32.378 points. So just wait for the close, and then take that closing number, take this number and add it and subtract it from that number. Now for the weekly expected move, I do have a script. So let's go take a look at charts. And this comes from another source. I can't share this. But this is showing the lower and upper edge of the expected move for the week for ES or whatever instrument you want to take a look at. And in YouTube, Sheena says, too bad the video resolution can't be higher. Can't see any of the prices on your chart. Sorry about that. As far as I know, the highest setting on YouTube that I can set is 720p. So try that. And yeah, I understand. I have a high resolution monitor, and my settings on Thinkorswim may be too high resolution to actually see the numbers. All right, so that's where that information comes from. So this is for ES, and these numbers were the numbers that worked today that provided resistance, targets and resistance. And again, we'll look at setups in a minute. All right, so let's go on to NASDAQ. In NASDAQ, the call buying frenzy continues. And I watched a video on YouTube last night that called the stocks that we'll take a look at in just a couple of minutes, the Magnificent Seven. And we'll look at Hero in a few minutes and see that call buyers were again driving price in those stocks. All right, so the levels that are in play here, let's just take a look at a QQQ chart. This is 1 day, 1 minute for QQQ, showing Spotgamma levels, and note that price just sliced through multiple levels here, including the call wall, which should have acted as resistance, and price moved up above the 336 level that then acted as resistance. And now it looks like QQQ is testing the 335 call wall again. So those are the Spotgamma levels for QQQ. So again, call buying frenzy. And up to the 336 level. And again, pointing out that 335 is the QQQ call wall. All right, let's talk about shifts in levels to wrap up positional analysis. So let's go take a look at we'll take a look at the gamma levels while I talk about the shifts in levels. So the shifts in levels are primarily in the NASDAQ. So for SPX, this chart is showing absolute gamma, again for SPX, and the orange bars are showing positive gamma or call gamma above the zero line, and the blue bars are showing negative gamma or put gamma below the zero line. And first of all, 4,000 right here is the put wall, and that did move lower from 40.50 yesterday. So that level has also oscillated between 40.50 and 4,000, and it is at 4,000 today. That's the strike with the largest net negative gamma, and that can be expected to act as support. And then the absolute gamma strike did oscillate back up to 41.50, and that's pretty obvious, the strike with the largest absolute gamma. And then the call wall remains at 4,200. So the shifts in levels for SPX, volatility trigger shifted higher to 41.45, put wall shifted lower, and the absolute gamma strike shifted higher. All right, let's take a look at SPY. Again, absolute gamma levels. Call gamma orange, put gamma blue. 400 remains the put wall. And there was only one shift in levels for SPY, and that is the volatility trigger shifted slightly higher from 412 to 415. And DFL Cali, hello, thanks for the live stream, you're welcome. I'll talk about Tesla in a few minutes. We'll get to Tesla. I always cover Tesla every day. So for the only shift higher for SPY was the 414 volatility trigger. Otherwise, the put wall remains at 400. The absolute gamma strike remains at 412, and the call wall at 420. All right, QQQ. Actually, we'll take a look at NDX first. And for both QQQ and NDX, every level that I follow shifted. And for NDX, volatility trigger shifted higher. Put wall actually shifted lower. And it's back down to 11,000, not shown on this chart. And then the absolute gamma strike is at 13,500 now, and that moves up from 12,975, where it has been for quite some time. And then now the call wall is at 13,550, and that also moves up from 12,975, where it has been for quite some time. So bullish shifts higher for NDX. Same for QQQ. All the levels shifted higher. And some pretty significant moves. So here is the put wall at 328. And then the absolute gamma strike, 330. And the call wall at 335. And that shifts up from 330 yesterday. So very bullish, shifts higher in levels for QQQ. All right, one thing that I want to take a look at, I'm going to go to SPX and look at the Vanna model. And once I go over this in detail a little bit, I will take a quick look at the Vanna models for the other instruments. So what this is showing is market makers delta notional and how it changes with price. Delta notional shown on the vertical axis and price shown on the horizontal axis. There are two curves here. The light gray curve is showing how market makers delta notional changes with changes in price alone. That's showing as price increases. At some point, market makers will have to start selling futures to hedge their delta exposure. They want to remain delta neutral. And then this pink curve is adding implied volatility to the equation, showing how market makers delta notional changes with changes in price and implied volatility. And that's the Vanna effect, the change in delta with a change in implied volatility. And this is showing that market makers delta notional that they have to hedge will be less than predicted by the delta, the price only line. And then on the other hand, if price decreases, they will have to sell futures to hedge their delta exposure, and the delta notional they will have to hedge will increase, be greater than what's shown by the delta only line. All right, let's see where SPX is trading now. and I've got 4160, 4163. All right, so that's somewhere between these two lines. And what this is showing is at some point today when SPX was higher, market makers really did not have much hedging to do up to around 41.90. I think the high was about, we saw was 41.88, 86, something like that. And now moving, as price continued to move higher, market makers would have to start to sell futures to hedge delta exposure. And then if price moves lower, market makers will have to start selling futures to hedge their delta exposure. So for the initial move up this morning, this Vanna curve did provide a little bit of a tailwind up to a certain point, and that tailwind stopped right about here. All right, let's move on. And we'll just take a quick glance at the Vanna models for other instruments. And note that SPY gamma notional is slightly negative. For SPX it's positive, for SPY it's negative, and then it's also positive for QQQ and NDX. So that's the, see the shift, more significant shift to the downside for SPY. We'll take a look at QQQ. More indicative of a positive gamma environment for QQQ. So speaking of the data, let's take a quick look at data. And I noticed this morning that it looks like the numbers for gamma notional have been adjusted now that make more sense, more in line with numbers that have been shown in the past. So I'll focus on that as well as the gamma index. So this gamma index is a proprietary measurement of total market gamma for market makers, and a positive number indicates market makers' position on the gamma curve is positive, and again they have to trade against price to hedge their delta exposure. So that is for SPX. This is what I'm looking at: SPX, SPY, NDX, and QQQ. And now let's focus on the actual gamma notional numbers. So for SPX, positive gamma notional. For SPY, it's actually negative. And then positive for NDX and QQQ. So that's some indication of how market makers will be expected to hedge. This is based on information at the beginning of the day. All right, let's take a look at some setups now. So I'm going to go start with the hero signal, and this is the combined signal for the S&P 500. And there was some discussion about this in Discord last night, so I do want to make some clarifications. So first of all, this what this is showing is when traders take options positions in SPX, SPY, and ES futures, market makers hedge those trades with ES futures. So options trades in SPX, SPY, and ES, and market makers hedge those with ES futures. They buy and sell ES futures. And this is a combined signal showing that hedging pressure, hedging flow for the S&P 500, combining all of those signals: SPX, SPY, XSP, which is not really significant, and ES. All right. So Marty asked, can you go over the Spotgamma watch list? I'm not sure what you mean by that. This is my watch list, and I will go over that in a few minutes. So I'm going to start with setups for the S&P 500 and also for NASDAQ, and then we'll take a look at some stocks, and then we'll go to live market. So we finished the positional analysis. My thesis for the day was definitely bullish for NASDAQ and not so much for the S&P 500 based on the shifts in levels. And I talked about the shifts higher in levels for NDX and QQQ. All right, so this is a combined signal. And this is the default. When I open up my Spotgamma dashboard and see Hero, this is what's shown, the S&P 500, and this chart is showing price with the white line and the Hero signal, the combined Hero signal for all of these instruments. Again, SPX, SPY, and ES. And this is what I use typically. This is what I use the default. So this is, again, the combined signal. It is showing all expirations and the total 1 day look back period, the defaults. And this is what I look at. And if I look at anything else, it's for additional clarity and interest. So let me just quickly take a look at the other instruments. So first of all, let's note this number here. This notional value is about minus 200 million for the combined signal. All right, so let's take a look at the individual components, again, just for interest. So first of all, for SPX, and now that is positive 149 million, and it's showing a very strong correlation with price action. So SPX SPX, again, showing us very strong correlation between hedging flow and price action. So that's SPX. Let's take a look at SPY. And this has been pretty typical recently that the SPY has not necessarily been in sync. Traders are taking negative delta positions in SPY. And then here's the ES futures, and that is minus 1.1 billion. And then this is ES futures. All right, let's take a look at the, let's go back to the combined signal. And RJ says, Doug, before you were using SPX mostly, is the switch to the combined because ES vol has picked up? Not necessarily. I've always looked first at the total signal, and Spotgamma recently added ES futures to this combined signal. Before, this signal was just SPX and SPY. And I don't know, 2 or 3 weeks ago, Spotgamma added ES to the equation. And it's a significant contribution, as you can see. So I'm back on the total signal. This is what I look at by default. Excuse me. This is what I look at by default. And sometimes I will, sometimes I did just look at SPX if it seemed to provide a more clear signal. So I'm looking for clarity. But if you're looking for accuracy, this is the signal you want to look at. The combined signal, all expirations. All right, so let's take a look at setups. All right, so Marty asked about Spotgamma alerts, and that's shown here. So right now they have call and put wall breaches here. Notice all the call wall breaches. And we'll talk about that in just a couple of minutes. So let me quickly go over setups here on the S&P 500 and bullish right out of the gate. Traders taking positive delta positions and supporting long positions up to the first test. This is the upper edge of the expected move for the week. And notice traders start taking, let's zoom in on this. Start taking negative delta positions right when price reaches that level, shown by the shift down in Hero. And that's just a pullback. And then this time price was testing the upper edge of the expected move for the day, here and here. And note now, Hero makes a higher high, Hero makes a lower high, and then makes a lower high again. So setting up, first of all in the morning, confirmation long, and then reversals at, clearly at the upper edge of the expected move for the week, and also the upper edge of the expected move for the day. All right, let's zoom back out a little bit, and let's just see what traders were doing. And I can also separate out put and call transactions. So traders were buying calls. And let's just, I'm going to zoom a little bit here. So up until about noon today, call buyers were definitely winning. Note that's 2.1 billion versus minus 1.07 billion. So they're buying calls and buying puts, shown by the rising orange line and the falling blue line. All right, now it looks like they're about even, but price has definitely been rolling lower. All right, let's go take a look at Bookmap. Go back to ES. So here's the long setup. I'm going to zoom in on the morning session. Let's go from 9:30 to 12. Note the launch from the SPY 415 large gamma 1 level. And price really takes off about 10 a.m. Eastern Time up to the upper edge of the expected move for the week, the first test. And then remember, options traders started taking negative delta positions, and that shifted a little bit. And now here they are taking, Heroes making lower highs as price tests the upper edge of the expected move for the day twice, and then moves lower with the Bullard comments. And this was definitely supported by order flow. Notice price moves up. The CVD line is rising. Aggressive buyers. You can just see all the green dots there, the green volume dots. And also the buy stop orders shown by the rising yellow line. And it's also shown by these green dots. Buy stop orders fueling the move higher. All right, so those are the setups for the S&P 500. Initially bullish setup, again up to resistance at the weekly and daily expected moves. And then order flow shifted somewhat bearish. Large traders were started selling with iceberg orders shown by the falling light blue line, as well as the aggressive sellers with the shown by the falling cumulative volume delta. All right, let's take a look at NASDAQ. That was really the story for the day. And let's take a look at Hero for NASDAQ. So let's go to NASDAQ. And note, traders were buying calls. And this is the combined signal for NASDAQ, combining NDX and QQQ. And we'll zoom in on this. And go up to about noon again. And actually, it looks like put buyers were more aggressive. Oh, it's about an even match up until about noon. But call buyers were definitely winning. So this is NASDAQ itself. And let's take a look at, I want to take a look at one other thing in Thinkorswim. Let's go to the Market Watch tab. And this is the S&P 500. And this is showing what, well, I lost my pen tool. Oh, here it is. Showing the stocks driving today. It's all technology. And we'll take a look at NASDAQ. So the call buying frenzy in large cap tech has been driving price higher. So let's take a look at some stocks, and we'll take a look at the Magnificent 7 plus Netflix, and this has leveled off some since around noon. So I'm just going to go through these stocks pretty quickly. So Apple, AMD, we'll look at Hero for all these stocks, and then we'll go to Bookmap and just go through these stocks. So Apple, AMD, Amazon, Google. Meta was not really participating today. So we'll go on to Microsoft. Here's Netflix, not in the Magnificent 7, but definitely moving higher. NVIDIA. Call buyers made a fortune today. And let's go to Tesla. Again, call buyers driving. All right, let's go take a look at. All right, so RJ asked, can we see the combined Hero signal? Are you talking about for S&P 500? That's what I was just showing. So it was bullish up until about 10:30, and then it continues to shift lower. Oh, NASDAQ. So NASDAQ, this is what this is showing, is it's up until about noon, it was somewhat neutral. Really helps to shift, break out the call buyers and put buyers. And again, this was showing it was about neutral. All right, we'll get to the live market in just a moment. So let's quickly skip through. Remember, NASDAQ is an index of stocks, just like the S&P 500. So we'll just skip through these quickly. So there's Apple. And I don't have Netflix here, so we'll just stick with the Magnificent Seven. So Apple, AMD, strong rally. So for Apple, note 175 is the call wall, and note the absorption at that level. Buy sweep up to that level, then absorption. 175 call wall. And then AMD 105 is the call wall, and price breached that level this morning before 10 a.m., did a retest, and then moved higher. Amazon, again, remember call buyers driving in the morning, now is reversed lower, looks like maybe trading just around the opening print. Google, again, remember call buyers driving all these stocks. And Google showing a little bit more afternoon strength.
Sorry, I don't understand.
Hold on just a second. Okay, there's Google. Meta not really participating today. We'll skip on to Microsoft. And for Microsoft, 315 is the call wall. And note that level was breached pretty early in the day, a retest, then price moved higher. NVIDIA. And call buyers were really at it today and made a fortune if you bought a call in NVIDIA at the open. And then finally, here's Tesla. All right, let me take a look at a couple questions. Sheena asks, my understanding is that positive gamma equal more range-bound trading, where negative gamma equals trending, and that's generally true, since market makers in a positive gamma environment are trading against price, and in a positive gamma environment, in a negative gamma environment, they're trading with price. All right, so you can definitely have, that does not infer any directional bias other than how you want to trade. So in a negative gamma environment, there's always that put Vanna fuel for a rally. So if price rallies in a negative gamma environment, that means in an index that traders are long puts, market makers are short puts, and if price rises and implied volatility drops, those puts will start to lose value. Market makers' delta notional will decrease, and they can buy back their short hedges, and that can help to fuel some very strong rallies. And that was a pretty frequent event last year at CPI reports, or just the day after monthly expirations, when traders long puts, when those puts expired on Friday, monthly expiration, market makers could buy back their short hedges on Monday, and that often led to rallies on Monday after the Friday expiration. So Sheena also asked, outside of divergence between hero and price, it's not clear what advantage hero data gives in trading except after the fact. And after the fact may not be entirely correct. So let's take a look at let's take a look go back to the S&P 500. And I would say this was a clear leading indicator of a short setup. So for the move higher this morning, it was a confirmation. It was something that you could look at and see that, yes, traders are taking positive delta positions, market makers are buying futures, and I want to be on the side of the market makers. Then around 10:30, Hero clearly started making lower highs, setting up longs or shorts at a key level. First of all, the upper edge of the expected move for the week there, another short here, and then a final retest of that level. So Hero started moving lower at around 10:35, and then this final test of the upper edge of the expected move for the day occurred around 11:55. So clearly a leading indicator there, giving you plenty of time to prepare for shorts at those points. So you see the divergence in Hero, you look at Bookmap for levels that price might reverse, and then also watch order flow to confirm. So this is the, for me, this is the primary advantage of Hero, giving you that leading signal. All right, so let's go take a look at, let's see, one other question. So Neocore asked, can I clarify the UDEM? And that is the upper daily expected move. And I covered how I get that number earlier. You might want to go back and watch the recording, but that is the upper daily expected move. And the LDEM is the lower daily expected move. And that is what I'm showing on my ES chart is based on ES. All right, so here is the S&P 500 futures. And now it looks like price is trying to reverse higher. Let's go take a look at Hero. And we'll zoom in on this a bit. So looking at this, I would watch. Notice Hero has been falling, price has been falling. Hero starts to rise, then levels off. It stops falling. So now I'm looking and thinking for a potential reversal higher. That's how I would use this signal. Steady downtrend, moves up, doesn't move back down again, actually makes an equal high. So that started about 2 p.m. Eastern Time. So let's go take a look at Bookmap now. Going to zoom in. And here I'm starting to watch order flow. Let me shift these volume dots a little bit. So notice that some iceberg orders are coming in, And this is not a clear level here, this 4165, not right on a level. So I see that leveling off in Hero, thinking, okay, this might be a bottom. And then I see, well, let's see, that was not, it looks like those orders were canceled. So I'm looking at Bookmap now. And I see some larger traders coming in with iceberg orders. So I know that Hero's leveled off. Traders are stopped taking negative delta positions. Larger traders are coming in with iceberg orders. That's 1,026 contracts, then 585 contracts. Price is making higher lows and then breaks out above this 4165 level. That is SPX 4165. And note the shifts in order flow here, the shift in order flow, a lot of these green dots coming in. Here was a good entry point. Not quite a retest of the 4165 level that had acted as resistance. And then again, as traders start taking positive delta positions. All right, so that is the S&P 500. You can just read the order flow here, and if you need more help with that, I suggest watching Bruce's advanced webinars. He's typically on Monday, Tuesday, and Friday at 10 a.m. This week he's having a pro trader webinar series with other traders. But typically, again, he's on at 10 a.m. and he is an expert at watching order flow, and he typically watches ES for his entire session. All right, so there's a couple of requests, one for NQ. So let's go on to NQ. So here's the reversal higher at the QQQ 334 level. And let's go take a look at Hero. And we'll go to NASDAQ. And here, there's no clue. And there's a little bit more clarity from QQQ. So here, note the divergence, the shift higher in the Hero signal for QQQ. So there's a clear divergence higher. Traders start taking positive delta positions in QQQ right before 2 p.m. and then price reverses higher about 2:15. So pretty clear reversal there when you just take a look at QQQ. And Marty asked, do you find these Spotgamma alerts actionable? And yes, I do. Especially for stock trading. Most recently, I've focused more on futures. But yes, the Spotgamma alerts are actionable, and I've written a number of articles for Spotgamma showing how to use the call and put wall alerts. And what Marty's referring to is these right here, these alerts. So for example, this Tesla call wall was just breached just a couple of minutes ago. And when you click that, if you subscribe to Spotgamma Alpha, it takes you directly to the Hero chart. And RJ asked, he wants to take a look at Hero for NVIDIA. There it is. So NVIDIA looks like it really topped out just around the 317 level. And RJ, I would say for NVIDIA, the move has been made, the money's been made. You know, if I were trading this afternoon, I would just focus on the S&P 500 and the NASDAQ. Yeah, if you missed the move this morning in NVIDIA, you missed it. Just wait until tomorrow. So that brings me to one last thing, and this is my watch list in the Spotgamma Equity Hub, and this is showing next expiry gamma percentage for these stocks. We'll just take a quick look at these, and this is probably mostly the Magnificent Seven. So here's NVIDIA showing that 45% gamma is expiring tomorrow, and that is again tomorrow. This is showing 45% gamma expiring tomorrow, 5/19. Note the call domination above the 300 level, and this can potentially set up a call gamma unwind. If so, traders have been buying calls that expire on Friday all week, and market makers, they sell the calls and they have to buy stock to hedge their delta exposure. As those calls start to expire, they start to lose value. Market makers' delta exposure decreases, and they can sell their long stock hedges. And that works if traders continue to buy calls tomorrow, the market makers will have to continue to buy stock to hedge their delta exposure. So this is just a potential. NVIDIA, AMD, and the green is showing call domination above a certain level. Netflix, Tesla, Google, Amazon, here's Apple. And the threshold that Spotgamma uses for this is about 30%. So just keep that in mind for tomorrow. All right, Alexander asked, do you see more push in Netflix? I'm not sure what you mean by that. We'll take a quick look at Hero for Netflix. And so far, Hero has leveled off for Netflix. So not necessarily. All right, and Neocore, thanks for the support. Yeah, if this doesn't do it for you, just move on. I think this provides extremely valuable information. All right, that's all I have for today. We'll watch out for the call gamma unwind tomorrow, and it's been a very interesting day. The call buyers in the Magnificent Seven were definitely driving the market higher again today, and we saw that Hero as well as order flow and Bookmap provided some excellent signals for long and short setups. So thanks again. Thanks for watching. Thanks for your questions and comments, and I will see you tomorrow. Bye.